Hello, everyone. Thank you for joining us. Welcome to the 18 Group Data Management Insight webinar, where we'll be discussing streamlining trading and investment processes with data standards and identifiers. My name is Stefan Dreyer. I'm happy to be moderating for you today. I am the Managing Director of the Association of National Numbering Agencies, also known as ANA, which is a trade association globally, 123 members responsible for the promotion and adoption of the implementation of standards within the capital markets. Before we jump into the webinar today, I just would like to highlight a few of the upcoming 18 group events that we have lined up for you. You can see these at the bottom of your screen. Firstly, we have the AI and Capital Markets Summit in New York City on the 26th of June. Then we have a webinar discussing an agile approach to investment management platforms for private markets and the total portfolio view, which is on the 11th of June. And then another webinar, Are You Making the Most of the Business Critical Structured Data Stored in Your Mainframes, on the 17th of June. So again, we'll be discussing today the importance of trading standards and identifiers. Joining me in this topic, I'm very pleased to welcome Linda Powell, who's the Deputy Chief Data Officer at BNY, Adriana Inap, Executive in Residence at Global Digital Finance, and Laura Stanley, Director of Entity Data and Symbology at London Stock Exchange Group. Thank you for joining us, all of you. Before I let them elaborate a little bit more on their background and introduce themselves, I just want to make you all aware of Slido, which we'll be using today. So it's an app to allow you to participate. We'll be running some audience polls, and we'll give you the opportunity to ask some questions. So if you look to the right of your screen, you'll see two panels for that. So to my esteemed guests here on the panel, maybe we could just do a quick round of introductions. If you could share a little bit more on your background and your engagement with the topic of standards and identifiers. Adriana, do you want to? You're on mute.
Sorry. Yeah, there we go. It was muted. It was muted centrally. Sorry, you would think by now that wouldn't happen anymore. Apologies. Hi, everyone. Adriana Inab, as I was introduced, I'm an executive resident at Global Digital Finance. We're a think tank working on all digital asset topics. Prior to that, I was at Credit Suisse, where I was a director of public policy, and I covered all the digital innovation topics that included data, data protection, crypto, artificial intelligence, but really data was underlying everything that we did. And prior to that, I was a trader in the fixed income market. So really understanding how capital markets affects, how innovation affects it, how data affects it, how standard affects it. Thank you.
Thank you. Linda?
Sure. I'm Linda Powell. I'm currently with Bank of New York Mellon. I spent a few years with Citibank, but I spent the majority of my career working at the Federal Reserve, both the New York Fed and the Board of Governors, as well as the Office of Financial Research and the Treasury Department. And I think it's because of the work I did on the government side why I was invited to speak today. I was heavily involved in a lot of data standards for the marketplace, and in particular, the legal entity identifier.
Welcome. Thank you. Laura.
Hi, everyone. It's really good to meet you all. I'm Laura Stanley. I'm Director of Entity Data and Symbology within LSEG DNA. So that encompasses all of the symbology that we offer, which includes the CDOL, the ISIN, LEI, amongst the Perm ID, the RIC, and really managing the strategy and the interoperability of that, as well as on the entity data side as well, which of course touches on the LEI as well. I've been at the exchange for almost 18 years now, and also I sit on the board of ANA as the vice chair and the board of the DSB. So I do have a lot of insight into the standards world.
Great. Thank you all. And thank you for taking the time to join us. It should be a great conversation today. Before we jump into the questions, let's go ahead and open up a poll so we can get the audience joined in right away with their feedback. So we have the question for you. Where are you seeing the benefits of data standards in your organizations? And again, that's on the right side of your screen. Look forward to your response. We'll come back to the and discuss your answers. But let's go to the first question. So Laura, maybe you can start us off. So we're talking about standards, but I guess it would be good to understand, why do we even need data standards within capital markets? What are organizations going to lose out on by not implementing standards within their processes?
Yeah, thanks. Well, I think it's like fundamental and essential in where we're living today. You can't imagine a world without standards, and it's underlying. They're really required, obviously, for varying use cases: regulatory reporting, transparency, interoperability, KYC. But if we look at MiFID and EMIR regulatory reporting, we've seen a real shift in the last 15 plus years, and definitely seen a rise since the financial crisis in an effort to really increase transparency and mitigate risk. But then if we look at this from a data interoperability angle, the mapping of these identifiers is really key to enable that data to flow through. So identifiers that are really complementary to this are, of course, the ISIN, CFI, the FISIN, the LEI. They may seem like small components in the large ecosystem, but they're really essential at ensuring that transparency and enabling automation, reducing the risk. So without standards, the markets can become fragmented, and we really need that common language to operate for infrastructure providers, and to really give clarity and confidence across borders.
So quite a number, quite an extensive list of benefits there. Adriana, would you agree? Is there anything you would add?
Yeah, absolutely. Sorry, I just realized that before. I don't think I mentioned the 10 years that I did policy was at Credit Suisse, and prior to that, it was trading at Goldman and Merrill. But just for my background, yeah, absolutely. I mean, I completely agree with Laura. And I mean, data standards are really the plumbing of financial markets. Without them, we face, like Laura said, inefficiencies, duplication, operational risk, poor transparency. We rely on precise real-time information flows across jurisdictions and systems, and a lack of that standardization can lead to, radical breaks, reconciliation delays, and regulatory misreporting. Basically, being on the trading side on the cap markets, if we don't adopt, the markets were not as big then or as connected as they are now, and firms that don't adopt common standards are going to end up bearing much higher costs in clearing and integration, while exposing themselves to compliance risks and failing to capture the benefits of automation and analytics at scale. Ultimately, they're going to lose competitive advantage.
So, and as this data ecosystem, this modern data ecosystem, becomes more complex and evolves, is it even more critical to have robust data standards? How does that work, Adriana?
Absolutely. Yeah. I mean, you need to all be singing off the same song sheet, basically. One of the projects that we did when I was at Credit Suisse was a little bit different, but it was on digitizing reporting. So we worked with the FCA and the Bank of England together, and then hoping eventually to get more regulators involved. But one of the issues was with the taxonomy and the language, and that with different, even within the same regulator, asking for different information, which meant that we were reporting the wrong things, we were being asked the wrong things, we were supplying the same information 2 or 3 times. Now imagine you take that, and then the data itself that you're providing is not standardized. So that complicates things so much. So, I mean, the bottom line is you need to have the data standardized and then going into a taxonomy that can talk to each other in order to make the most efficient market and really reduce. I mean, we found that with that, it was something like $4 billion were being wasted or spent in the UK on data transmission.
Wow, that's an impressive number. Laura, what are your thoughts on this kind of complex, evolving data ecosystem and the need for robust data standards?
Yeah, I definitely think it's more critical than ever. I think what's interesting about the modern data ecosystem here, we talk about Gen AI, blockchain, digital assets, but we all need identifiers within that. We need to understand what we're talking about, and throughout the life cycle, really. So it's really important that identifiers are fit for purpose in the ecosystem and that we really evolve with that. And I know that on the ANA side, we're doing a lot. We've got the ISIN revision taking place this year. So we have a real opportunity, and everyone has an opportunity to feed into the development of those standards, which is really important. But at the same time, like within LSEG data and analytics, we have the PERM ID, which is not a standard. It's not going to become a standard, but we use it as a way to assist customers in connecting to our data and linking to our data with the ISIN, with the LEI, with all of those common standard identifiers that we know and love. It really acts as that connector. So it's vital for our clients to ensure they can map to our data and our various offerings. But there are obviously complexities there as the ecosystem grows and changes, and we really need to evolve with that. I think it's really important.
If I could just add also, I mean, it's the Rust standards also are not essential, not only essential, but for interoperability, but also for trusted traceability. As we start to deploy more AI and machine learning models, the garbage in, garbage out risk is real, and we need to really take that into account, which means standards are the foundation for reliable insights, risk management, and scalable automation. So those things, it needs to be now, it needs to go faster because of the way that the background is working, the underlying technology is working.
Yeah, and I'll add to that, in the data realm, we've always talked about the 3 V's, volume, velocity, and variety. The standards help deal with the variety. And AI is just pushing us into a realm that I don't think we've ever seen before when it comes to velocity. I was watching some videos yesterday about how quickly we're getting to the next generations of AI. And without data standards, you cannot hit the velocity. There's no way people can manually, behind the scenes, map country codes from one nomenclature to another. You're gonna have to have the standards to get to the velocity, or you're gonna get garbage.
Yep.
So I'm glad you mentioned that. So you have this technology topic as a driver for another keyword that was mentioned there in terms of the evolution of the standards.
Yeah.
And we'll come to that in some of the other discussions following. But let's take a quick look. We've talked about the benefits of standards. Let's see what our audience has come up with in our first poll here in terms of where they're seeing the benefits of standards in their organizations. With quite a significant number of votes here, we have data quality and the improvement of data quality, followed by regulatory compliance, system interoperability, transparency, risk mitigation, and nobody here is stating that they feel that helps their customer or their customers' experiences. What are your guys' thoughts on that? Is that shocking to you or surprising in any way? Or
absolutely not. It's improved data. It's foundational, right? I mean, it's the name is in the on the package. It's it has to be firms are there are dramatic improvements with improved data quality. Absolutely.
So I think the key here is the system interoperability and integration. You can automatically interoperate, which will impact and improve data quality. If I'm not manually, or I don't have an algorithm changing data that could potentially introduce errors, your interoperability is going to de facto improve your data quality. And nobody said it's a better customer experience, but I could say as a customer of a lot of things, having to call a company 3 times to tell them to change something on me, or them, having to work through what was obviously a manual process on their side is not a great customer experience. So I think it's a derivative of what we see in the data realm with improved quality and interoperability, but I think it absolutely impacts customer experiences. There's less breakage, and customers love that.
Great. So we'll probably come back to that. We'll have another poll a bit later in the session here. But let's go back. Laura, you mentioned when you were listing or citing the benefits of data standards, you touched on the regulatory reporting. So it'd be interesting to hear the new regulatory landscape that we have. Is that exerting an influence on data standards, and are the existing frameworks meeting those objectives?
Yeah, absolutely. It exerts an influence, and I think it really drives the use of standards. I think then once that's driven, then they can be used beyond regulatory reasons. But it tends to be the primary driver. If we look at the introduction of the UPI, for example, that's quite an interesting one that we're seeing from a global angle, as it's been mandated in several jurisdictions. Within DNA, we're meeting our clients' needs to ensure we can within LSEG DNA, we can ensure we're catering for the inclusion of the UPI as well as the ISIN alongside it. So yeah, the regulatory landscape is really key, and associated with onboarding any new identifiers as well, whether that be from infrastructure, the mapping, or the interoperability, as we've touched on. It does really exert an influence. But as we see the evolution of the regulatory landscape, we must continue to educate our clients and market participants. I think locally regulation tends to drive the use of standards, but on a global scale, once embedded, there is a real opportunity to extend those use cases beyond regulatory reasons. But we've got to continually evolve and look at the client's needs.
Right. Linda, Adriana, anything you would like to add there, given your previous experience in regards to regulation? Would you agree with Laura on that front?
Yeah, absolutely.
And I could say I've sat on both sides, where I'm the person pushing the regulations, and I sit on the side where I receive the regulations. And when I was sitting on the public side, I had banks actually come to me and say, please mandate this, please require this, because it will help us get it embedded into our banks, and that will make our internal operations easier. And I can say, being on the private side, that it would, we're all about efficiencies. And so we're adopting things before they're mandated as a requirement, but having it mandated does, it speeds up the timetable. And it gives you partners to interoperate with.
Yeah, I agree there, Linda. And I think there is always a challenge with bringing on board a new identifier, especially if there's not a regulatory mandate, because of the cost involved. And it's not the cost of the identifier, but it's the cost of the infrastructure involved and the mapping involved to do that. And that's no easy feat in itself. Even with the introduction of AI and new technology, it's a big step, and some customers might not be ready to take the leap if they're not forced to, or from a regulatory angle.
Okay. So that's a good segue into our next topic. And Linda already mentioned in terms of AI, and I said we would talk a little bit about technology and some of the other drivers that we see. I think it's very hard to look at any kind of news feeds without seeing the intersection of technology, whether that be blockchain, crypto in the capital markets, whether that's AI or things like ESG. Adriana, where do you see the greatest need for new standards, or where we need to think about new or evolving or modifying standards to fit the new world?
I mean, I think everywhere. I think it should be blanket. However, three standout areas for me: ESG. I mean, for me, ESG really on the technology side is the one. It's a no-brainer. It is a must-do across everything. But let's talk about data standards. It's a clear front runner. We lack harmonized taxonomies and identifiers for ESG data, not just on issuers, but also on instruments of sustainability linked to obligations. This undermines transparency, comparability, and credibility. So I think on the ESG side, there are so many things, so many reasons that we need more technology, and the data standards is the underlying, it's the foundation that you need in order to then build on the technology that will work so that it's interoperable and they speak to each other. Next, I would say crypto and tokenization. As tokenized instruments enter mainstream portfolios, the absence of universal identifiers for digital assets creates friction in custody, trading, and reporting. There's a case for adapting existing ISO frameworks like ISIN, LEI to cover these new asset types. I mean, I think that maybe Laura could probably speak about this a little bit more than I can, or actually, no, it was Linda, isn't it? And then private markets in private equity, venture capital, private credit, standardization of entity and instrument identifiers is still lacking, making due diligence and exposure tracking really manual and error prone. So I would say starting with that. I mean, then there's also AI and with money laundering. Yeah, but I think those three, let's start with those.
Laura, what are your thoughts? I know you've had some experience in development of standards in digital asset space. Would you agree with Adriana? Are there other drivers, or where do you see potential solutions in the evolution of those standards?
I think from a standards perspective, the standards are there. If we do create ISIN codes for digital assets today for tokenized referential instruments, but maybe more education is needed throughout the markets. And then the complementary nature with the DTI, the digital token identifier standard, is really important. And that can obviously link then to the LEI, etc. Internally within LSEG, we also issue identifiers for crypto assets. So that's Perm ID, CDOLs. So we do have that coverage there. But I understand what you're saying in terms of that. You want that overall view, and the challenge can be in terms of how you define a tokenized instrument or how you define a digital asset, and it can be different. But we are definitely feeding into the standards so that we can evolve.
So we've touched on ESG, we've touched on tokenization and digital assets. Linda, you mentioned earlier about AI. Is AI a driver for the need to develop new standards, or is it a tool for helping to implement them, or both? What's your thought on that?
Both. AI, one of the benefits of AI is even if you have to teach it, it is faster than a human, and it's consistent. So anything that needs to be automated, that you need that last step of the intelligence in the automation, AI can absolutely be incredibly helpful. But it's also a tool. If you've got really good standardized data, it can read it better, it can read it faster, and it will make better analysis. Just like a human being, if I get good information and I can tell what's related to what, I can make a much better decision than if I'm guessing. And that's what AI does. It guesses really quickly, and it guesses based on a lot of information. But if it doesn't have to guess, it's even better.
Absolutely. So we've talked very broadly about data standards. We've talked about identifiers. Let's delve into a little bit more specifically some of these identifiers, and in particular, legal identifiers. Linda, why do we need them? What purpose do they serve?
So I think Laura did a great job with the first question, talking about the benefits of identifiers. You really need identifiers for legal entities, for products, for what I would call reference data, because that really gives you an unambiguous and unique way of identifying things. So if we're talking about the legal entity identifier, which identifies, organizationally legal entities, in the US, we have, my favorite example is City National Bank. We have a lot of banks that have the name City National Bank. Some of them are related and some of them aren't. And so in order to figure out who you're doing business with, you have to actually go and determine which city national bank am I doing business with. With the legal entity identifier, I've got it. It's in a number. I know exactly. We ping it back and forth. It's the same thing when you think about a country code. If I'm trying to figure out, am I doing business with the UK or with England or with Scotland? If I've got a unique identifier to tell me which regional organization business I'm doing business with, then I don't have to think about it. I don't have to analyze it and figure it out. It's automatic. And again, we talked before about interoperability. The legal entity identifier drives interoperability. If I'm doing business with another bank, I know unambiguously that's the institution I'm doing business with. I don't have trades that fail. I don't have because I've got the wrong institution. It really helps drive the markets much more efficiently.
Right. So we've got the legal entity identifier at this entity level. Obviously, some of the other examples we talked about are in terms of particular instruments. We touched on tokenization of assets, the digital assets. How do we, and you touch on interoperability, that word has come up several times here. How do we get that interoperability between different types of identifier standards? So if we look at something like an LEI for the entity, an ISIN for an asset, a particular asset that's being traded, or if we take our DLT examples, things that are being tokenized, you have different implementations kind of at the token level. So we've got these different levels of things. Can we maximize the benefit by bringing them together? And how can we actually do that?
So I like to think of data standards as sort of, I'll get a little geeky for a minute, so forgive me, as the master data for the economy. So in every company, you know, we have a master list of who are all of our customers. We have a master of our security prices within our bank. Every bank has that. I like to think of the data standards as creating a master for the economy. So if we have a legal entity identifiers, we have a master list of who are all of the companies that are working. If we have ISINs and QSIPs, we have the master list of securities. I think we don't have a master list of digital assets right now. And once you have all of those masters, you can join and combine the masters. The key is understanding what are all of your entities, and I'll use the technical term entities, not necessarily organizations, all of your entities within the masters to be able to join them. So within a bank, you've got your list of customers, you've got your list of products, you've got your list of accounts, and then you join them all together and you get that interoperability. So you've got to have the internal corporate masters that do the joining of data together. But if everybody's working off of the same data standard, you've got an economy-wide master data set that we're all working off of. And that helps with the interoperability between organizations. And also, if everybody had the same master database, I wouldn't have to create my own master database. So that would save, you know, individual companies time and money.
Absolutely. Adriana, you were going to say?
No, and I just said, you know, between companies and across borders as well.
Yeah.
Absolutely. Laura, anything you'd like to add there? I know that LSE is involved in different mapping initiatives. You touched on that yourself. You mentioned mapping. And that kind of sounds like what Linda was describing in terms of developing this master. Anything you want to maybe cite as beneficial there?
Yeah, no, I fully agree with that. And from a data management perspective, so our connector, as I've mentioned, that's the Perm ID, where we link to all of these standards so that we can help our customers navigate the data more easily and seamlessly. But there's still gaps there in terms of on the LEI side. I know there are challenges with like lapsed records. And therefore it's not a data quality issue necessarily, but if it becomes stale data, that is a challenge. And that's something I know we as the LSEG LOU, the local operating unit, are doing a lot to help facilitate those lapsed records, so we can bring all of the legal entity data up to speed as much as possible. But there are challenges there if there's not that mandatory or regulatory backing. And then we've touched on privates as well. That's another one where that space, it really is quite broad, and there's not a standard today that does operate in that space. All of the standards are in some way issued for privates, but that's another one where I think we can definitely see it growing in the future.
Absolutely. So in building that master, there will be some gaps which organizations will have to look at how to overcome. Regulation could be a driver in closing some of those gaps, but I think also probably more wide-scale adoption of the standards to provide impetus for market participants to include them in their infrastructures. And so we've talked about now the legal entity identifier. We've talked about how to build this kind of central mass database of mapping of identifiers and different identifiers that do different things. But Linda, we have also, I think, different kinds of identifiers that do the same type of thing, or at least attempt to do the same type of thing. Can you talk us through some of the kind of real world examples, challenges that we have when we don't have a unified identification system or identification standard?
Yeah, I think you've got three data standard advocates on the call here, if I could call you guys that. But hopefully we would all also agree, like, I would prefer we never create a new standard again, unless nothing exists today. And I can share that when we started looking at, I'll start by talking about what prompted us to try and develop the legal entity identifier. And that was during the 2008-2009 financial crisis. When Lehman was failing, there was a collective holding of breath, both on Wall Street and in the regulators, because we did not have really good entity information about who owned who, and we weren't sure how trades were going to settle. I will say I had the great fortune, I was working at the Fed at the time. We had great insight, and we had some really good identifier mapping capabilities. But Wall Street was still, we were holding our breath to make sure that when trades settled, what failures there were going to be. And so after the financial crisis, we had a number of public-private working engagements where we looked at how can we make sure this never happens again? That if something is going to fail, we all know what the outcome is going to be in advance. And one of the foundational items that we found missing was unique, ambiguous, and publicly available identifiers of legal entities. I mentioned before, a lot of companies have very similar or the same names, but there's also the opposite true. Not all of Lehman's subsidiaries had Lehman in the name. So they might have a completely different name, and we didn't know if they were related. It took time to research it, and that was time we didn't have. That gets back to the V velocity, how data standards help with the velocity of using data. So when we started looking at, we needed a unique, unambiguous identifier that was publicly available. We looked at what were the standards out there, and we really thought we would try and just adopt something universally and globally. And we actually had some of the standard agencies come back to us and say, there's too much embedded information. You need to be able to track an entity over time. And JP Morgan Chase, technically I worked for JP Morgan Chase 30 years ago because I worked for Chemical Bank. And a lot of that has carried through. It's the same chart, banking charter, different names. It's had different names, you know, for a number of occasions. So you need to be able to have it persistent, unique, and open source. And there were some really good identifiers that were not open source. So I can't use it freely in the market. And so those were the main criteria.
I'm just going to add something there, because obviously this, you know, obviously, as you said, data standard advocates, and that's the underlying. And then for another conversation of the day, I just want to throw it in there. If you had that and it was on the blockchain, 2007, 8, and 9 would have been completely different. It would have minimal.
Absolutely.
Just throwing that out there that's for another webinar.
Yeah.
Yes, absolutely. It's a very dear topic to me. We can a lot of benefits of here the data ledger with DLT. But one point I think that you raised, Linda, which is I think good to highlight and maybe not clear to a lot of people, that particularly with identifier standards, you have not just the codes, but the associated reference data, right? And those two things together. So that code transporting that reference data. And so while the code can continue to exist and be utilized, it's about the evolution of the data associated with it, which makes it valuable. So let's jump in. We've talked a little bit about challenges now. Let's get our audience involved again and launch another poll here and find out from them where they are seeing the greatest challenges in implementing data standards. And while they are doing that, I believe we have also some questions already. So I'll ask the audience here. You'll see on your screen the poll, and we have an audience question. Give me 1 second. We have, how do we mitigate identifiers adding complexity? So for example, the process for issuing identifiers demands a data process to check organizations, people, existing entities, sanctions. So KYC. Laura, I know that LSE is involved in the assignment of many different identifiers. Can you maybe help us with how we, with the question here from the audience, how we can mitigate the complexity of that process?
Yeah, I think it's a balance, because we have to be very careful in what we're creating. Like, as a national numbering agency, we have that authority to create the UK ISIN, and therefore we can't just receive documentation in an email from someone at Gmail and just create an ISIN for a company that we don't know anything about. So we have to do our internal KYC validation, and we have appropriate criteria to ensure that they can all be met so that the ISIN can be allocated. And likewise on the LEI side, when we're allocating an LEI, we have to have appropriate documentation and authorization to do that. So it is a balance. We are always in communication with our clients because we really want to make the processes as seamless as possible. But at the same time, we have to internally understand the complexities, and especially around KYC, high-risk jurisdictions. So it is a balance.
Linda or Adriana, from your perspective, anything you would suggest to helping improve that complexity?
I think it's I would equate it to sort of like managing cyber risks. You have to always be one step ahead of somebody who's trying to do something nefarious. And if you didn't take away the controls that Laura's talked about, you could get shadow companies, so to speak, that would be engaging in markets. And I think the due diligence is critical and important. I think where the efficiencies come is if we do it once. If we can have an identifier that can be used by every bank as already KYC'd. That is where we would find the efficiency. So somebody's got to do all of that due diligence to make sure you're issuing numbers to the right companies. But I would like to see it where we just do it once rather than every bank having to do it individually.
Yep.
Absolutely. So we'll come to the results of the poll shortly, but let's take another question. I know we've touched on this already. We talked about different identifiers, different identifier formats, what Glyph does with the LEI. You had the Duns entity identifier. You've got many different at the asset level. Why are there so many? Like, is there, and I know you said, Linda, you would be very happy if a new standard wasn't created, only if one didn't exist.
They're proprietary. If you have a choice of creating your own identifier for free or paying to use someone else's identifier, you don't want to get into that long-term financial commitment. I think with the LEI, one of the primary criteria was it had to be open source. It had to be a public good. And so now we have a lot of mapping of other identifiers to the LEI. I see that all over the place. But the one identifier that I'm aware of that, or at least, back when the Glyph was created, the one identifier that everybody could use without having to pay to use it was the LEI.
So open source, the accessibility of the identifier. What else, Laura, would make for a good, if an organization is trying to figure out which identifier I'm looking to use for a particular use case, there's a suite of them out there. How, taking that criteria there that Linda mentioned about being accessible in the open source, what are some other attributes of an identifier that an organization should look at?
I mean, data quality is like an algorithmic number. It doesn't mean anything. It's all of the associated reference data that actually provides the richness to it. So it's really key that that data is managed and maintained to a certain level, so that it can be trusted as an identifier. But the landscape is complex because you have these proprietary identifiers and we operate them within LSEG, of course. We have the CDOR code, there's the RIC code, and therefore we have customers that rely on those codes. They like using them, and we provide a level of interoperability with those open data standards, such as the ISIN and the LEI. So I think it would be great in a new world just to say, yes, of course, let's use open standards, but we have to look at the client's needs as how they want to use the data. And I think it does really depend on the use cases. So obviously we know in the regulatory side of it around MiFID and MIR, etc., the ISIN and LEI will be key there. But there are different use cases internally, perhaps, where different identifiers still are fit for purpose, providing there's that level of interoperability. I think that's really key, and it's back to the mapping of that data. And that's a hard thing to get right, the mapping of that data, because they don't all sit at the same level of granularity. So if you look at like a hierarchy of data, unless all of that is managed and maintained in one central golden source, it has to be done across an organization, and that can be challenging to do.
Absolutely. And even within large organizations, you have sometimes a disconnect in terms of the standards being employed.
100%.
Sorry, Adriana?
No, I was going to say 100%. That was one of the things that we found with one of the regulators. They said one of the problems was that internally, the language, the taxonomy, the identifiers were different within the one regulator. So imagine when you've got, all the other different institutions.
Exactly, especially those organizations that are operating cross-border, right, and having to work with different regulators. So let's take a look. We talked about the challenges. We've talked about some of the different identifier formats. Let's see what our audience said in regards to the challenges of implementing data standards. So leading the way, legacy systems. So the old world slowing down employment. We have not far behind that, the fragmented data setup, cultural resistance falling in the middle there. So that mentality shift that's required, implement costs, and then at the end, keeping up with the changes to standards. What are your observations or your thoughts there on the results of our audience? Linda, maybe first.
Yeah, I think we've all built lots of applications that are using key identifiers, and changing those key identifiers is hard, because that's how our businesses run. So it is the legacy systems. There are strategies, and I'll say, rather than switching from your internal identifier to a legal entity identifier, add the legal entity identifier to your master of clients. And that way you can keep operating on your internal identifier, but you then have the interoperability of the legal entity identifier. So I think as we get more and more of these master data reference data sets, I'll refer to them as, that are data standards, we can add them to our systems, and hopefully down the road, we can then switch from the internal identifiers. I don't think we'll ever get away from within each company having our own internal identifiers, because there's always the 5% that's different from the way others do business, that we need to have something internal. But it will help with, in the commercial markets, it helps with, the trading, it helps with interoperability across organizations.
Adriana, so the legacy systems, I know you've talked about tokenization a little bit, and that's something that comes up very often in the digital assets conversation, particularly with TradFi organizations trying to move in that space, and the disconnect, between blockchain and DLT and these legacy systems that they have. And obviously, legacy systems and changing them ties into the implementation costs. We had a question in the audience as well. Maybe we can bring these together. How can DLT or blockchain support or complicate standardization efforts? Does it complicate it, or does it support it? And how does that tie into what the audience is saying here?
Yeah, I think, obviously their response that the legacy systems were, one of the biggest problems is correct. And that's, there are solutions now that, before didn't really exist, where before was more Scotch tape, and the idea was, if you could, in theory, build a green grass field beside where you continue with legacy, and then one day you just switched over, but obviously incredibly expensive, not going to happen. So what do? In the meantime, you just kind of Scotch tape these things in, and that's not really useful. So, but now there are sort of middleware solutions that will almost be like a Google Translate, that will allow you to use the new identifiers and the new technologies with the older system. So, it sort of translates it, because otherwise it's just too expensive. But the problem is also, once a company or a bank starts to move onto new technology and away from their legacy systems, then the standards that they had previously need to be updated. So everything needs to be updated. Banks that work cross borders, they have EU is different from APAC, is different from the US. Those are all issues. With DLT, I think, again, it's the garbage in, garbage out. I think that in theory and in the end, that will be the best way forward, because you can start building native on there and eventually move things over. But if we continue to do it the way that we're doing now on the legacy systems, there's no move forward. But if you start to build and you start to put things on and shift them a little bit, you start building anything new, any new transactions are done on the DLT, on the blockchain, under new standards, and then you start to shift things, whatever's left of the legacy systems over, then in time, I see it will be less fragmented. But maybe, I don't know what Laura and Linda think about it.
Yeah, I think harmonization is really key here. So, a great example of this is the ISIN and DTI standard. If we look at the ISIN's 30 or 40 years old, I can't remember if so it's very old. However, it is evolving and it's still as relevant, if not more relevant today. And linking to the DTI is really important because, and internally within digital assets, I'm really promoting that we use all of these identifiers that are available, not just for the traditional financial instruments, but also for the tokenized, because it's really important that we will be in this position where there is a bit of both, probably. It's not going to be a flip a switch. Therefore, I think we need something that is going to provide that harmonization, and standards can really do that if they're done right.
I love the idea of the harmonization because as soon as we get switched over to all of our new standards, there will be some new innovation that is going to blow us out of the water. And if we're comfortable with the harmonization, and that's the way we're working towards things, it will make it easier to bring in the next great thing.
So we've established that there are different standards for different use cases in terms of identification. We talked about the benefits of the standards, but also some of the challenges in implementation. Linda, in a perfect world, and you touched on the harmonization aspect, what would a good or even great standard identification system look like?
Well, I'm going to say if you get back into the fundamentals, like what are the pieces it has to have, we got 16 U.S. federal regulators together back in 2011 and published a couple of papers on what does a good unique identifier look like. But again, it's open source, it's unambiguous, it's persistent. Regardless of what kind of platform you put it on, it all looks like that. So I'll send people to Google for the linchpin paper, which laid out the foundations for the legal entity identifier. But I think there's, it needs to be persistent over time. And I'm a big advocate of the open source, just because then it can become, everybody can use it.
Absolutely. So that's quite a comprehensive list. Adriana, would you add anything there in terms of criteria?
Sorry, it was
just if you had a view whether there would be any other criteria of an identification standard that would make it maximize the value, where you would consider that's a really good standard.
Making the machine readable and interoperable by design, possibly. Is that, I don't know if that was brought up already. So that identifiers can be integrated into smart contracts and on-chain protocols. Closer conversion between public and private initiatives. Well, that's not actually something about the standards, but that's just how we can move things forward. But yeah, I think they're machine readable and interoperable by design, but I think we've talked a lot about the interoperability.
Okay, we've got a few minutes left. I see there's no other audience questions. Please do take an opportunity if you have a question to drop it in. We'll try and grab it before the end of the session. But I would like to ask all of you, just as we kind of wrap up here, looking forward, obviously a very standard question, what does the future look like? But how likely do you think it is that we will see some kind of adoption of a unified global identifier standard? How do you see data standards and identifiers evolving, developing over the next 5 years? Maybe just a minute or two from each of you on that topic.
If I can start, just because I have to hop.
Absolutely.
Sorry. I think that full global unification is ambitious, but alignment is accelerating through regulatory pressure. The LEI case in point, adoption was sluggish until the regulators mandated it. Now it underpins much of the systemic risk monitoring. So I think over the next 5 years, we'll see broader adoption of ISO standards across new asset classes. Like I said, tokenized ESG-linked instruments, and then hopefully the integration of identifiers into smart contracts. So yeah, I think, the direction of travel is clear. Standards are moving from being a back office concern to a strategic enabler of digital finance.
Linda.
I am very sorry. I'm going to have to hop, guys. Thank you so much.
Thank you for joining us.
Yeah, I'm going to say that AI is going to help drive the adoption of standards, because we will find that as we have better standardized data across the globe, as well as across companies, our AI is going to work better. And so the regulatory pressure got us really far. I think banks, when I've gone into commercial banks, I was very pleasantly surprised that everybody was like, nobody knew the role I had played in legal entity identifiers. And they were like, oh yeah, we use them all the time. And the standardization's great. And I was very pleasantly surprised that it is doing what the original objective is helping companies actually do business. And I think the need for velocity is going to drive the need for standardization.
The 3 V's.
The 3 V's.
Laura, how do you see things evolving?
Yeah, I think from what Adriana said, I really like that comment about the strategic angle, because often, yeah, this is seen as a middle and back office need, that you need to have an identifier, but it's about bringing it to the front and saying, actually, how can this drive our business in a number of ways? And the data management really plays into that. If we look at today, it's a key problem for firms in access to high quality data, well-validated data. But standards can really underpin that if they're done in the right way. And then back to my point earlier on harmonization, that's really important. And the mapping is really important. Yeah, I definitely don't think we need another identifier. We don't need another standard. But we do need the harmonization, the mapping, the interoperability, and to ensure that they're fit for purpose for the future. That's really important.
Absolutely. I think that's key, that, it's not just built and use it and it's good forever. They have to evolve. Things are changing. We touched on some of the drivers of that change. And I think, it's a very complex topic. We talk about identifiers and standards, and we really only touched on the cusp, because you can get a lot more technical, you can go a lot deeper. But I think one of the key things is that people understand that, as we saw from the poll here, it is not just one of those cost things that you have to do a burden, but there are lots of benefits that can be obtained through the implementation of standards in trading, in investment, in many different facets of the infrastructure. So listen, I'd like to thank you all for your time and your insights and your expertise, Adriana, Linda, and Laura. Thank our sponsor, London Stock Exchange Group Data and Analytics. And again, please don't forget the upcoming events. We have the Capital Markets in New York, a live event on the 26th of June. 2 webinars after that. Again, these are on your screen there. Please look into them. And I want to thank everybody for joining us today. And please, after the event, you'll receive information on a survey. We'd love to get your feedback on this webinar. Thank you for joining us, and have a good day.
Cheers. Thanks for hosting.